to our channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're gonna speak today about a stock called OLN Corporation, ticker OLN, a chemical manufacturer with a market cap below 3 billion. And as you can see in this chart, just about exiting a multi-year bearish channel. So the company has been struggling quite a bit since early 2024, and it seems to have bottomed somewhere around 17 with a few rallies over the last few months, of a few pullbacks. And why is this trade interesting? Well, this is a typical case of blood in the streets scenario where you have a chemical manufacturer, in particular chloralkali, that is capitulating in terms of the cyclicality of their industry. So when you look at this company here, they've been down quite some time because of the recessionary environment in their sector. So there's been a shock in demand following the boom in the pandemic, as you can see here, over the 2021 and 2022 period. However, some recent news broke out a few days ago where they actually lowered Q4 guidance, which will be reported by the end of this month, due to chlorine demand slump and also operational issues in one of their sites. So essentially, management slashed the Q4 2025 EBITDA guidance by about 45%. They went from 110 to 130 million down to 67 million. Weak demand was also part of the reasons in terms of slashing this guidance. And you would imagine, right, with a shock like that, the company, again, it was reported on the 8th of January, you would think that the stock would drop from a cliff, but actually it didn't. It's been rising gently. Well, I think that despite those bad news, there are some good news that if you look a little bit under the hood, you look a little bit closely, could overtake, could be stronger than that negative sentiment. So, for example, when you look at the ownership of the stock, just between the three largest holders, right? This fund manager here, BlackRock and Vanguard, just those three add up to more than 30% of the stock ownership. But you have a few others, State Street, Millennium, and so on. So it seems like a very large chunk of the ownership of the stock is actually institutional, it's not weak hands. And that could explain why the stock hadn't fallen that much. But there are also fundamental reasons. So first of all, their competitor, which is Westlake, is a different stock with a ticker WLK, actually announced a permanent shutdown of significant chlorovinyl capacity by the end of last year. And that removes supply from the market, just as this company is continuing to make progress in that commodity. So basically, right, when there is less supply of a material, then producers can get away with higher prices. And these guys follow the philosophy, their approach in terms of how they go about their business is to focus on high value add products. So they don't chase volume. They seek to get the most profit out of the volumes that they work on, even if that means, right, running at low capacity. But now they have a bigger piece of the pie, so to speak, and that gives them more pricing power, gives them the ability to be more profitable overall. So when you factor that in, right, that guidance, cutting low the bar for the end of Jan call, the bad news is already out. In terms of what could drive the stock further down, that's one less thing, and it is a big thing that doesn't need to be accounted for. So this is a trade, if you will, that has been de-risked a little bit in terms of the downside. When you look at the upside, right, we have, as I mentioned before, a sector that has moved from endurance to capitulation. Their competitor's decision is the white smoke signal for the industry bottom, and that creates a structural floor entering 2026 in terms of pricing. On top of that, OLN has a ammunition Winchester division, um, which provides a cash flow floor in terms of how the financials look at the company. It's quite stable. It's not a booming business, but it provides them with a baseline in terms of the revenues that they generate. So let's look at what is actually turning around this stock. So when you look at how the market is pricing this company, you see that despite all this news, the PE just keeps rising significantly on a 12-month basis, right? Forward looking. With all those news in the meantime, well, let's look at the estimates overview because these issues, as I mentioned before, are transitory. They're not structural, right? And when you look at the sales, EBITDA growth, EBIT, EPS, it is looking quite interesting in the sense of where the stock has been and where it's heading now. So of course you had that big drop over 2024, right? Because the market was pricing that earnings were going to drop substantially to 8 cents down from 1.12. But now that the company is turning around, coming back to that and to surpass it in 2027. So I do foresee a recovery path, right? Back to perhaps the previous levels that we saw here, around 30, and possibly beyond that, for the reasons that the way that the company is coming out of this situation is a bit of a transformative process where they're going to have more power in terms of pricing power. I'll touch into that a little bit later. So, in terms of one of the things that they've done as well is to dissolve a joint venture called Blue Water Alliance. And the reason why that is important is because they were working with a partner in order to sell product. And that is a material called EDC, ethylene dichloride. So basically, they were a price taker in volatile spot markets, but now they've exited this venture to do it in the way that provides them with the ability to have much more autonomy in choosing the prices that they take. So that puts them in a better position, again, similar to their philosophy of working on value add rather than volume. So with all those things, you could see this stock having a stronger moat, and analysts considering a re-rate in the coming months as the situation stabilizes. So for example, when we look at the way analysts look at the stock, it has been decreasing over time, right? With the price target getting more and more dropped. But what if, as the risk position that these guys are in, or the risk of the business model is reduced? Well, we could start seeing this concentration of hold ratings a little bit tilting higher up into the scale. I don't think that's immediate just yet, and the price action here in the chart suggests that it might take a little while. Nonetheless, it seems to be starting to break through, right? And then I would probably wait for price to stabilize, perhaps even wait over earnings and hear more fundamental news. But I do see a recovery path here that could be a path that takes several months. So there will be substantial opportunities down the road in order to jump on the bandwagon and see a recovery. So for example, we have a resistance here just below 40. That would be a magnificent path to set as a price target. If we are able to move back to these levels here, as you can see, the stock is starting to battle this moving averages, right? So it's gone a couple of times already. It might take, say, a couple more. So I'll be probably positioning myself to take a position after earnings and stay throughout it over the spring. So with that, once the timing is better, I'll consider a structure that provides us with explosive upside. Hope you enjoyed the video. See you soon.